Hello traders, Gary Wagner here. It is Friday, finally, as we say on the islands of Hawaii. Happy Aloha Friday. It is the 23rd day of September, and this is the daily report for gold. And as I said yesterday, and oh, what a day it's been, let me cap that by saying, oh, what a week it's been. Currently, we've got the markets just closing 1656. That is basis your spot market. That puts it down about $79. You've got 57.20, 56.20, somewhere in there as the ask bid spread. In your December contract, you are trading at 1660.20, so the spread between the two about $3 to $4. Of course, yesterday we talked about the fact that my primary target, although I did not think we'd hit it one day later, was 1650. I told people to be on the lookout for that, to be looking at 1700, primarily 1650. I did issue a buy recommendation that went out by special email this morning. Traders who took that call, you are in roughly at 1647, 1648 on the long side. Your stops are at 1615. This is going to be an extended show as we've got a lot of information to cover, but I want to start with a couple of charts, primarily looking at Fibonacci retracement on the short-term and the big-term pictures. First, let's go ahead and look at the short-term picture. To do that, we want to look at a 240 minutes chart. This is in straight candlestick format. A couple of things to point out. And today, more than most days, I think you are going to see the incredible forecasting ability of Fibonacci when combined with Elliott Wave. It's incredible, and we'll look at this in a second, but here's what I want to start with. When we talked about the 1650 area, guys, we were looking at a particular target, and it comes to us in two different ways. The first way is a 61% retracement of the, what I call the the July rally. What I call the July rally, which started down at around 1480, traveled up. The high on this, of course, is about 1920, and the retracement is just at and above right now the 68% level. That's 1647, as you can see. Secondly, in candlesticks, when we take a look at this, you've got a beautiful hammer which is formed at the bottom of this market. Now, traders, when we look at the hammer, why is it such an important single candlestick? Let me explain. You can see the small-bodied candle, because it's green, it says that it opened and closed higher. That's not the story. The story here is it opens and traders bring this market down. In fact, they bring it down drastically to this low right at around 1630. At that point, you get buyers coming into the market and push it back up to the open and push it right above the open to the close, giving it that small-bodied candle. The reason it is called a hammer is because the Japanese believe that this particular shape, the market sentiment behind it, means that they are hammering out a bottom, and they're talking about the way that you would actually go ahead and forge a brass bowl with the use of a hammer and hammering out to get that rounded bottom like that. And so for that reason, this is called a hammer. Now, traders, this I think you have to acknowledge is one amazing moment when we look at Fibonacci retracement. What I am doing is the beginning of this big rally. This is a weekly chart. This is in Henkin format. This is of the gold COMEX contract, continuous contract. Now, follow me on this, traders. When we look at this market from the beginning, and this low that I'm pegging is right around 708. When we take a look at that low from 708 and then take this entire rally up to 1925, and we see a retracement of this big picture, you get a 23% retracement that comes at 1638. The actual low of the marketplace today was just below 1648. You can honestly say that it hit that with precision. Now, 23%, not much of a retracement. Well, when you consider that we're looking at a retracement that spans from 1925 to 708, you can honestly see that this retracement area itself is fairly sizable when you consider the fact that this move itself took from 2008 to 2012 to achieve this high, and in 1, 2, 3 weeks it was able to retrace to 23%, down back to, as I said, roughly the 1638 on the low. And it does appear as though as this market trades higher and begins to close, it's going to close at this area. It has closed, excuse me, at 1658, roughly $20 off the low. Traders, one quick correction. When I said it retraced in 3 days, I should have said 3 weeks, as we are looking at a weekly chart. This is a weekly chart, standard candlestick format. This is of the cash or spot market. And as you can see on this chart, just in the same way, when we take a look at the market from the beginning of this rally in 2008, the low being 687, when we take it to the high being 1918, this tremendous move, when we take a look at the big picture, it took multiple years to go to 1918 and only 3 weeks to come down off that high and to retrace 23%. And traders, for the last chart that we'll look at, this is a 720-minute chart. Each day represents 2 candlesticks, obviously straight candlestick format. And as you can see, when we broke extremely hard. Again, these are half-day charts, so we had the evening session, the morning session, and then it closes right about the the close of this prior candle. And when you look at these 2 zones here, they're coming off of a much more long-term base. And again, with that, what we were looking at, let me try to take that back. This takes us back to when we were at about 1150. And this again is in July, roughly a year ago, a year and a month, the bottom of C. And you can also see when we look at this chart, when we take it from this particular market low all the way to the top, our 32% level here matches right up here, in the same way that 32 is corresponding in terms of a Fibonacci harmonics to the longer term Fibonacci harmonics that we looked at in terms of from 2008. This has been an incredible week. We've seen a sell-off like no other. When you look, we are defined in terms of the market moving on this tremendous 5th wave up, our A, our B, and our C, which I believe has a strong potential to have come to a conclusion. I would look for bottoming action through the beginning of the week. As I said, I really don't expect to see any kind of a low below 1624. This has been Gary Wagner, wishing you as always good trading, and we'll talk to you on Monday for another daily report. We will update you through the weekend. If anything on Sunday happens worth us noting, we will send you out a special email text message. Have a great weekend. Bye-bye.